This is a dramatized story inspired by real debt situations. For educational and entertainment purposes only. Not legal or financial advice.
Section 1. Hook. I was $312,000 in student loan debt, and my husband had absolutely no idea, until the day the collection agency called his cell phone instead of mine. That was a Tuesday morning in October. He was at work. I was sitting in our kitchen in suburban Columbus, Ohio, pretending to work from home when my phone rang. I let it go to voicemail, like I always did. Then, 30 seconds later, his number lit up on my screen. And I knew. I knew it was over. Section 2. Reality. Let me take you back to where this started, because it didn't happen overnight. Nothing this bad ever does. My name is Renee. I was 41 years old when everything fell apart. I have a master's degree in public health, a degree I earned over 6 years at 2 different universities, one private, one state school. I believed, the way so many of us were told to believe, that education was always worth it, that the debt would be manageable once you had the credential, that a good salary would follow a good degree. Here's what nobody told me. I graduated into a job market that paid public health administrators $52,000 a year in my region. My loans totaled $289,000 at graduation. By the time interest capitalized while I was in deferment, twice, that number had ballooned to $312,000. But the student loans were only part of it. See, when you're drowning in loan payments you can't afford, you start using credit cards to fill the gaps. Groceries, the car repair, the kids' back-to-school supplies, things you'd normally pay cash for start going on the card because you have exactly $47 in your checking account 4 days before payday. By October of that year, here is what my full debt picture looked like. Student loans, $312,000, a mix of federal and private. The private loans had interest rates between 9 and 11%. The federal loans were on an income-driven repayment plan, but my payment was $780 a month, and I hadn't made one in 4 months. Credit cards, $23,400 across 4 cards. One was maxed at $8,000. 2 were within $200 of their limits. The 4th one, I'd hidden it from my husband entirely. He didn't know it existed. Car payment, $489 a month on a 2019 SUV we bought when things felt more stable. We still owed $14,800 on it. Medical bills, $6,200. My younger daughter needed her tonsils out the previous spring. Our insurance covered most of it, but the anesthesiologist was out of network. Isn't that always how it goes? The bill went to collections after 90 days because I kept meaning to call about a payment plan, and I just, couldn't make myself do it. Personal loan, $9,500 from a credit union I'd joined through my employer. I took it out 18 months earlier, telling myself I was consolidating the credit card debt. I wasn't. I spent $4,000 of it on credit card minimums and used the rest to float our household for 3 months. Total debt, not counting the mortgage on our house, $100. I made $54,000 a year. My husband Marcus made $61,000 as a logistics manager. We had 2 daughters, ages 9 and 12. We had a mortgage of $1,840 a month. We had 2 car payments. His truck was $367. We had daycare costs that had finally ended the year before, but left us with no savings cushion. On paper, our household income looked almost fine. In reality, we were underwater every single month by between $600 and $1,200, depending on what broke. Section 3. Emotional crisis. I want to tell you what it actually feels like to live inside a debt crisis this deep. Not the numbers, the feeling. You wake up at 2 in the morning and your brain is already running calculations, not productive calculations, panicked ones. You're moving money from account to account in your head, trying to figure out which bill you can float until Friday, whether the automatic payment you forgot about is going to overdraft you, whether your credit score, your FECO score, has dropped so far that you'll get denied for the balance transfer you were counting on. I used to lie next to Marcus and listen to him breathe and feel like the worst person alive. He trusted me. He thought we were struggling like normal people struggle. Tight, but managing. He had no idea that on my laptop, in a folder labeled Work Documents, I had spreadsheets tracking debt I'd never shown him. The collection agency call started in August. Federal student loan servicers can't use collection agencies the same way private ones can. But my private loans were another story. A collection agency had purchased 2 of my defaulted private loans, and they were relentless. 3 calls before 9 a.m., sometimes 4. They called my mother. They called my sister. And then, that Tuesday in October, they found Marcus's cell number somewhere. I still don't know how. He called me immediately. He said, "Renee, some company just called me asking about a debt. What is going on?" I said, "I'll explain when you get home." I sat at the kitchen table for 6 hours, waiting for him to walk through that door. I thought about every possible version of that conversation. I thought about what our marriage might look like on the other side of it. I thought about our girls. When Marcus came home, I had printed out everything, all the spreadsheets, all the statements. I put them in a folder on the kitchen table and I said, "I need you to sit down. I need you to let me get through all of it before you say anything, and I need you to know that I am so sorry." He didn't yell. That was almost harder. He sat and read every page in complete silence for 20 minutes. Then he looked up and said, "How long have you been carrying this alone?" And I completely fell apart. The shame of a debt crisis isn't just about the money. It's about what you believe the money says about you. That you were foolish, that you were irresponsible, that you are failing the people who depend on you. That shame is what keeps people hiding. And hiding makes everything worse. Every month you don't face it, interest accrues, late fees stack, your credit score craters. The hole gets deeper while you're standing at the bottom of it, pretending to look at the sky. In the weeks after Marcus found out, we barely spoke. Not because he was cruel, he wasn't, but because neither of us knew what to do with information that enormous. We slept in the same bed like strangers. I could feel him running the numbers in his own head at 2 a.m. I had given him my insomnia like a gift he never asked for. Our older daughter, Maya, noticed. 12-year-olds notice everything. She started asking if we were going to lose the house. The word foreclosure had apparently come up somehow. Kids hear things. And she'd looked it up on her tablet. Foreclosure. We weren't there yet. But I couldn't say with certainty we wouldn't be. Section 4. Wrong choices. Before Marcus knew, I had already made almost every wrong move there is. Let me tell you about them, because maybe you'll recognize yourself. Wrong choice number 1. The payday loan. 18 months before everything came out, I took out a $1,500 payday loan to cover a car payment and 2 minimum credit card payments. The fee was $225 for a 2-week loan. Annualized, that's somewhere around 400% interest. I rolled it over 3 times before I finally paid it off. I paid back nearly $2,800 on a $1,500 loan. I told myself it was a one-time solution. It wasn't. Wrong choice number 2. The balance transfer that made things worse. I transferred $6,000 from 2 cards onto a new card with a 0% promotional period. Smart move, right? Except I didn't read the fine print carefully enough. When I missed 1 minimum payment, just 1. The promotional rate expired, and I was hit with 26. 99% interest retroactively on the transferred balance. I also kept using the old cards after I'd paid them off. Within 8 months, I owed money on all 3. Wrong choice number 3. I took an early distribution from my 401k. This one still makes me sick. 2 years before everything collapsed, I took $14,000 out of my retirement account. There was a 10% early withdrawal penalty. Then I owed income tax on it. It counted as ordinary income, which pushed our household into a higher bracket that year. I also owe And this one I didn't anticipate. I had racked up $4,800 in IRS debt from that tax year that I'd been on a payment plan for and then let lapse. So, add IRS debt to the list. Wrong choice number 4, ignoring the mail. For about 8 months, I had a stack of envelopes on a shelf in my home office closet that I hadn't opened. I told myself I'd deal with them when I had a plan. I was waiting for the right moment, the right emotional state, the right amount of courage. That moment never came on its own. Those envelopes contained 2 collection agency notices, one lapsed insurance notice, and a letter from my student loan servicer about a missed certification deadline for the income-driven repayment plan I'd been counting on. Every one of those ignored letters made my situation measurably worse. Wrong choice number 5, lying to Marcus. Not in dramatic, elaborate ways, in small, exhausting, daily ways. We're fine. It's under control. I moved some money around. We're good until Friday. Small lies that required other lies to support them. I was spending so much mental energy maintaining a false version of our financial life that I had almost nothing left for actually solving it. And Section 5, turning point. About 3 weeks after Marcus found out, he came home on a Wednesday night with a printout. He'd spent his lunch break researching. He put it on the table and said, "I made us an appointment, Saturday morning. I don't know if this is the answer, but I think we need to talk to someone who actually knows what they're looking at." It was an appointment with a nonprofit credit counseling agency, one affiliated with the National Foundation for Credit Counseling. He'd also found the name of a bankruptcy attorney who offered a free initial consultation. We went Saturday morning, both of us, and sitting across from a real human being who had seen situations like ours, who wasn't shocked, who didn't flinch, who just started asking questions and writing things down, was the first time in 2 years I had breathed correctly. The credit counselor was a woman named Diana. She had been doing this for 22 years. She looked at our full picture, everything, and she said something I will never forget. She said, "You're not here because you failed. You're here because the system you were told to trust didn't tell you the whole truth. Now let's figure out what tools you actually have." She wasn't promising us anything. She was just offering clarity. And after 2 years of fog, clarity felt like oxygen. She walked us through options. She talked about a debt management plan for the credit card debt. Not debt settlement, not bankruptcy, but a structured repayment through the agency with potentially reduced interest rates negotiated with creditors. She was honest about what it could and couldn't touch. Student loans, especially private ones in default, were a different category. The IRS debt had its own resolution pathway. The medical debt in collections was possibly negotiable directly. She also said, gently but clearly, that given the scale of the private student loan default and the overall debt load, we should also consult with a bankruptcy attorney before making any decisions, not because bankruptcy was the only answer, but because we deserved to understand every option available to us before choosing. We left that appointment 2 hours later. Marcus took my hand in the parking lot. He hadn't done that in 3 weeks. He said, "I don't know how we fix this, but I think we can figure out how to fix this." That was the turning point. Not a solution, just the decision to stop hiding and start looking directly at the thing. Section 6, Educational Info. I want to share what I learned in the months that followed because I wish someone had explained it to me in plain language years earlier. When Diana talked about bankruptcy, she explained the 2 most common consumer options. Chapter 7, Bankruptcy, and Chapter 13. Bankruptcy. Chapter 7. Bankruptcy is sometimes called liquidation bankruptcy. For people who qualify based on income, and there is a means test, it can discharge certain unsecured debts relatively quickly, often within a few months. However, and this is critical, most federal student loans are not dischargeable in Chapter 7 under standard circumstances. There are some very limited exceptions being tested in courts right now, but do not assume your student loans disappear. Private student loans have slightly more legal complexity in this area, but again, do not assume. The impact on your credit score is significant. A Chapter 7 filing can stay on your credit report for up to 10 years. But for some people, it is the beginning of rebuilding, not the end of everything. Chapter 13. Bankruptcy is a reorganization plan. Instead of liquidating assets, you propose a 3 to 5 year repayment plan to the court. This can allow you to catch up on mortgage arrears and potentially protect your home from foreclosure. It also stays on your credit report for 7 years. For our credit card debt, a debt consolidation approach through the nonprofit's debt management plan was what Diana recommended we explore. This is different from debt settlement. Debt settlement involves offering creditors less than you owe, which carries real risks, including significant damage to your FICO score and potential tax liability on forgiven amounts. Credit counseling through a legitimate nonprofit agency is worth pursuing before any other option. Look for agencies affiliated with the NFCC. Be wary of for-profit companies using similar language. For the IRS debt that had lapsed, Diana referred us to a tax professional who works specifically with IRS resolution. There are options including installment agreements and, in some cases, offers in compromise, though qualifying is not simple. Please hear this clearly. I am telling you my story, not giving you advice. Every situation is different. Please consult a licensed professional, a bankruptcy attorney, a nonprofit credit counselor, or a tax professional before making any decisions about your debt. What worked in our situation may not apply to yours. Section 7. Resolution. I'm recording this 14 months after that Saturday appointment with Diana. I won't tell you everything is fixed because it isn't. We are enrolled in a debt management plan for the credit card debt. Our IRS payment plan is current. We consulted with a bankruptcy attorney and ultimately decided not to file. But having that conversation gave us information we needed. The private student loan situation is ongoing. We are working with a student loan advocacy organization and an attorney who specializes in this area. My FICO score, which had dropped to 511, is now sitting at 588. It's not good, but it is moving in a direction. Marcus and I talk about money now. Every week, with a spreadsheet open on the kitchen table and 2 cups of coffee. It is not romantic, and it is sometimes tense, and it is the most honest we have ever been with each other. Maya asked me recently if we were going to be okay. I told her the truth, which is the only currency I have left that hasn't been devalued. I said, I don't know exactly how long it's going to take, but yes, we are going to be okay. If you are sitting somewhere right now with a stack of mail you haven't opened, with a number in your head that you are afraid to say out loud, I need you to hear this. The number does not define you. The hiding does not have to continue. There are people whose entire profession is helping people in exactly your situation find a path forward. You do not have to figure this out alone. You just have to make one appointment, just one. That is the only next step. Section 8. CTA. Get the free debt checklist in the description. Link below.